Hi, folks. Welcome to the Weekend Investing Daily Bite of Thursday, 13th of November. Very, very volatile market. Market actually went up and touched 26,000 today. But since it has been rising for the last many days, it succumbed to, selling pressures at that level and virtually gave up all the wonderful gains that we had in the morning. So no new fresh news today to really support the market, and I think some more time perhaps now needed near 26,000 before we actually break out going forward. Let's read the disclaimer fully, understand it, and then move ahead in this video. I request the 48% people who watch our videos but do not subscribe to help us uh, be more motivated and subscribe to our channel. Let's look at some charts. You can see here last four sessions, Nifty was moving up very, very sharply from 25,300 odd levels. We moved very sharply to 26,010 was the top today. And then we gave it up about 120 points towards the close at 25,879. We are still within striking distance from an all-time high. This is not a bad situation to be at all. The market is showing resilience. The market is not going down on bad news days, and it is taking its sweet time to go to a new high. Nifty Junior also very flat, 0.06% by the end of the day. Mid caps down 0.32%, gave up some of the gains during the day yesterday. Small caps also down 0.4%. Small caps have been a bit slow versus the rest of the market, not really participating in the run above. Nifty Bank up 0.18%, again, not consequential, but hanging in there near the top. Gold is up another 1.02%. So now, as you can see in the chart on the daily candle, we are like 2% from an all-time high. So much for calling this top as gold stop and then reversal down. I mean, it could still go down. I'm not saying that possibility is gone, but if it breaks out from here and does another leg like this, then what? So don't presume that things will happen. Go with the trend. If you are a short term trader, yes, you should have gotten out here and possibly would be getting in here now. If you're a long term player, was just a time correction, a price correction. You should not have bothered. Silver is up 1.86%. Now you can see the daily chart on silver for rupee. It has actually gone beyond where it was previously. It's probably leading gold at this point of time, and gold probably is also going to do this in coming days. And silver can really, really fire from here. I mean, at a new all-time high in rupee terms, uh, a lot of shorts would have got trapped who would have gotten confidence in the last few weeks that the rally is over. The advanced decline ratio was reasonably positive in the morning, but then you can see post around 11 o'clock till the end, the advances kept declining and the declines kept advancing. So the complete reversal happened of the market makeup during the day. And Nifty heat map is telling you that story. Uh, Many of these stocks were in the green this morning, but by the end, Eternal, Mahindra, TCS, ONGC, Sriram Finance, Bajaj Finance, ITC, BEL, HDFC, all these lost ground. Asian Paints is the new love of the markets, plus 3.96%, new 52-week high also on that. Power Grid up, L&T up, Indigo up, Bharti Airtel, and Hindalco also up. In the Nifty Next 50 space, again, you can see commodities were leading. Vedanta, Hindustan Zinc, both up. Then you also had Motherson, Adani, and Sol, Hyundai, Divi's Lab. These stocks did well along with some gains in DLF and LIC. Some losers in Varun Beverages, Mazdoc, Solar Industries, PNB, REC, United Spirits, and Naukri. In the mover of the day segment, you can see Infibeam. The shares jumped 8% as profit surged 51%, revenues hit record highs, and the stock hit about 8% higher from its previous move. You can see here that there was a huge move ahead of this, which was consolidating, and now the resumption seems to have started here. Sectoral trends, not too many sectors to talk about, not even a 0.5% gain in the highest gaining sector, 0.4% on metals, 0.4% on real estate, infrastructure, and pharma. On the downside, however, you had media losing 0.55%, CPSEs 0.6%, PSU banks 0.7%, and India defense down 0.8%. So significant uh, down moves on some of these sectors. Defense, which had been moving very, very strong for the last 3, 4 sessions, is correcting now 4% on Kochi shipyard after its results. Astra Microwave, Gardens, Reach Shipping, Solar Industries, and Scient all losing some ground. The US markets in the previous session saw Dow Jones go up 0.6%. S&P 500 was absolutely flat. Nasdaq was absolutely flat, also minus 0.26%, and Russell was down 0.3%. If we see the last 1 month, US markets, the leading indices have done well. Nasdaq, Dow Jones, and S&P. The broader market, as Russell 2000, was still in the negative. And over 12-month period, also you can see the broader market has not gone anywhere plus 3%. It's only in the Nasdaq 100, few stocks within that which are also in S&P 500, which have really caused the returns in the US market. So very, very concentrated stocks and market capitalization concentration has happened in the US markets. Some of the gainers yesterday, AMD is 9% up. Just few days back, it was dropping like nobody's business, and now AMD is leading the charge again at plus 9%. FV Inc. plus 3.5%, United Health, Goldman Sachs, and Cisco. Cisco was the market leader in the dot-com bubble, and I am seeing this in the top charts after a very, very long time. So Cisco up 3% for the day. We may have some of these stocks in our weekend investing US portfolio. That is a disclaimer for the viewers here. Tweet of the day. So Ray Dalio has been very vocal about money debasement and how money is getting printed out of thin air without any backing. And he explains very nicely that every few decades, governments like overspend. They go in a reckless spending spree, and then to fulfill those entitlements that people have, they have to continuously print money, and that continuously printing money causes money debasement, other asset classes to rise, and money basically debases. So this is a very important concept to understand. This happened in 1930s, this happened in 1970s, and whenever there is massive debasement that happens, all asset classes go up, whether it is stock markets, whether it is real estate, whether it is gold, whether it is other collectibles. Everything will go up because the value of money is crashing. So a lot of times, when we are stuck with this idea of, price earnings ratio and the typical valuation metrics, they they take a back seat or a side seat when these kind of events are taking place. Because when the value of money itself is debasing, then you can't have any absolute valuation. What used to be a great valuation multiple 20 years back of, let's say, 10 PE or 15 times PE, now 45, 50 PE is also no big deal. People are very happy to accept it because everybody is looking at relative valuation now. Nobody is looking at absolute valuation. So this debasement causes money to shift from one asset to the other on a relative basis. What is looking more expensive versus the other, instead of individual valuation. So any stock like Nvidia is at $5 trillion versus what? I mean, versus other stocks in the marketplace. Those versus other stocks in the marketplace. Those versus other collectibles, other real estate assets, other gold versus money supply. I mean, all these ratios then make sense. And because we've not had this kind of debasement since 1970s, most of the experts in the marketplace have not lived through that, or don't have have a reading on that, and just simply you know assuming that what happened in the last 30, 40 years will continue to happen. I think that is like being an ostrich with your head in the sand. So this concept needs to be understood very, very carefully. Michael Burry, the big short guy, who is famous for shorting the markets, seems to be shutting down one of his or his asset management company. This is speculation. Uh, we don't know whether that money is going into another AMC or the money is getting um, returned. In the letter, he says, "With a heavy heart, I will liquidate the fund and return capital." So it does look like uh, you know things have gone sour. And this is exactly uh, what I was mentioning in the previous tweet also, that you are shorting the markets basis, that things are overvalued. That overvalued concept itself has been thrown out of the window, as far as I am concerned. I could be completely wrong on that. So the markets will decide where it wants to move. If you stand in front of the market on the way up or on the way down, the markets will likely crush you. So it is always better to go with the flow. Markets are going up, you go up with them. Markets come down, you get out of your stocks and come down with it. That's the better way of playing the markets, in my view. Today we are going to talk about where should you be invested now in Indian equity, US equity, gold, silver, debt. Where should your money go? You watch this next episode from Weekend Investing. Do like and share this video if you liked it, and do of course subscribe to our channel. Thank you. See you again. Bye.